Guys, how are your classes going abhi tak? Like, are you able to follow through? How, because IGNU has a different, way of delivering these lectures, and
In
this,
English.
the sorry,
In English.
sorry,
In English.
in English. Yeah, no. My question was, how are you finding the lectures so far? I mean, have you started, self-study? Because the whole edifice of IGNU is based on self-study. So you guys like at least looked through your books? I did not get your question, Anurag. What was in English?
Lectures.
Yeah. So is it a problem? Like, have you selected English as the language or Hindi as the language? What is the preferred language for you?
ज़्यादा समझ नहीं आता
This
जैसे
is अब मैं बताऊं एक बात. This is the thing. Usually I give my lectures in English Hindi का mixture. But in the last class, I was pointed out, I think first class में कि please speak in English only, as there are many students from different part of India, and हिंदी सबको इतने से नहीं आती, which makes sense. But then this is the thing कि हिंदी बोली जाए या इंग्लिश बोली जाए. इंग्लिश क्लास में भी इंग्लिश नहीं बोलते. दिस इज द थिंग. आई मीन, बिकॉज आई अंडरस्टैंड, बिकॉज अगर आपको समझ ही नहीं आ रहा होगा आप क्या उसको करोगे. बट देन try to work on it, try to get the, like, at least some sense of it. मैं ट्राई करूँगी थोड़ा हिंदी बोलने का बीच में, but since we have to consider the whole of India, so English is the one language which everyone kind of knows. तो अनुराग, आपने आपका जो मोड ऑफ एग्जामिनेशन है, हैव यू चूज्ड इट लाइक इंग्लिश में या हिंदी में?
इंग्लिश ही ऑप्शन था
हाँ बच्चे, तो इंग्लिश अगर ऑप्शन है तो डेफिनेटली आपको इंग्लिश को ही, यू हैव टू गेट acquainted with it, and I know it might be a difficult thing, but try to work on it. It's not difficult at all. थोड़ा you just need to work on it. मैंने घर बैठे यार कोरियन सीख ली है, तो इंग्लिश क्या चीज़ है? नहीं, try, okay, try. And अगर your course material will be in English as well, तो अच्छा है ना. Through this you will be getting better at it. K dramas, yes, through K drama. That's very nice. Turkish, I have no clue. I'm pretty sure the people who are learning these languages, they have acquired the skills through the dramas. uh should we start? I think we should start. Okay, guys, with your permission, I am going to start the recording, and I'll be switching off my this camera. Please pin the presentation screen, taki with as I'm explaining things, you can at least look at it, what I'm talking about, because the things are a lot that we need to discuss today. So just have a look on the screen side by side. Okay, let's start. Okay, now we can start. So, guys, last class we were discussing block 3. Block 1 was completed, block 3 was being done. And please don't leave your attendances right now. My attendance jab leni hogi, I'll ask you guys when to drop your attendances. Please don't be in a hurry to leave your attendances. Okay? Yeah. Yeah. So we were on block 3, and we had discussed the advertising, publicity, and channel of distribution. The last thing that we needed to discuss was trade. The last topic that we discussed was your retailing, your wholesalers, retailers, types, and everything. We covered all that. So these 4 things are covered. The only unit that is left in marketing is your import trade and export trade. Yes, any questions? प्लीज डोंट ड्रॉप अटेंडेंसेज मत डालिए अभी. आई विल टेल यू गाइस जब अटेंडेंस देनी होगी. Okay, guys, import and trade export procedures we need to discuss today. So, guys, when we were discussing the basics of business, during that we discussed briefly about trade and then the types of trade, in which there were mostly like mainly three types. That was the import, export, and entrepôt trade. Besides that, we have unilateral trade, bilateral and multilateral trade. Bilateral trade is, I hope you recall what trade is actually. Trade is nothing but exchange of goods and services, buying and selling of goods and services, where there's one party called the buyer, the another party called the seller, and these people are selling goods at an arrangement known as a marketplace. Marketplace need not be a physical arrangement; it can be a virtual arrangement as well. These days we have majority of the work of this trade being done online. Okay, so it can be bilateral trade and multilateral. Bilateral is when there are two parties involved, and when there are more than two parties involved, it's called a multilateral trade. So internal external trade we have done, that is fine, but we need to focus now on import and export, where the goods and services are being sold off or purchased, as the case may be, uh, that extends through our geographical area of the country. Any country geographical area, when you cross it, that's a type of an external trade. Okay, and that is what is known as foreign trade, international trade. All these are synonyms for it. All right, and even during that time I also explained to you guys that why do we do this. The edifice, the rationale of getting into foreign trade was that you do what you are good at. I told you guys that we have very limited scarce resources. Okay, and due to these scarce resources, the problems of economics arises. That is why we actually do economics, because we have very limited resources, we have scarcity of resources, and we need that are very important and uh, main natural resources, or any resource for that matter, should be used judicially, should be used and not wasted at all. So that is the rationale. Do what you are good at, and if you're not good at something, it's okay, you can just get it from somewhere else, like the rationale of outsourcing. What is outsourcing? What you can't do yourself, you get it done through others. So foreign trade also says that, you know, trade theories also state that. Of course, you're not supposed to do trade theories because that's hardcore economics, and we don't have to delve into that. But you should know that why we are doing this. Simply, resources are scarce, resources are less. Let us not waste our resources. Let us focus on what we are good at. Okay, like India is said to be good at agricultural based products. Okay, we are good in gold as well. So whatever thing that is we are good at, we do export it. Now, there were, like, when I was a kid and growing up, I always used to say that imported goods are good. They are of good quality, better quality. But when I got into commerce and when I was learning about all these things, I came to know that no, India also produces very, very high quality products. But what happens is that according to these, the nature of demand, I may say, these high quality goods are basically exported. So when anything is being produced, you grade and standardize them. Standardize, standardization and grading. We did in discuss in the last class. I won't explain it again. And whatever quality you are ready to pay for, you get it. So that, when I discussed this thing in my class with my teachers, that day this thing completely changed. That no, India is also very pro at producing good quality services and products and services. It's just that these good quality products and services are mostly exported. Okay, and whatever is left, they are at a very high price. You can take an example of fruits. You go to a mandi. Okay, you go to a fruit market, and very high quality fruit will be very expensive. Not all can pay for it. So that is what it is. Okay, so coming to import, what import is, it is simply when you are ordering some stuff from outside and that stuff is coming to your country, to India in our case. I won't be repeating in this, because in our case it's India. Okay, So import is getting things from outside of geographical boundary and getting it in our country. That will be import. And when you are here, you are purchasing. Okay, an importer is a purchaser of goods. He is purchasing goods, whilst your exporter, or when you are doing export, you are the seller. Keep these things in your mind very clearly, that if you're an importer, you are someone who is purchasing, and if you're an exporter, you are someone who is selling. Okay, and then the third point comes, which is the entrepot trade, in which you first get things imported. Okay, you buy stuff and then you sell that stuff to some other country who may not have access to those products. Okay, there can be cases ki these two countries are in war, or they don't have any trade agreement between them. So what happens? A country can buy from them and it can sell it to B country. Okay, so that is the rationale of entrepot. Also, uh, it depends upon the numerous trade regulations, government regulations that are on certain countries. That at a particular point of time, you may not be able to directly trade with that country. Example can be war, can be any n number of policies. So in that case, what happens? They deal with other countries who may be having the same product. So that is the entrepot trade. Examples of these ports are Singapore, Hong Kong. They are heavily into entrepot trades. We also get gold, like our diamond traders in Surat. They get diamonds from Africa. They refine them and they sell it to the whole world from there. So we are very good at it. So that is kind of an example of an entrepot trade. Okay, again, we don't have to focus much on entrepot trade. This much knowing is enough. We mainly have to focus on import and export. Okay, just we have to focus on that and just know why we are doing it. Okay, importance is the similar points, that specialization and efficiency of production. Of course, when you are producing the products again and again and again and again, and definitely keep in mind that the product that you are good at. So you are again and again producing that product. So you eventually with time get good with it, and you may achieve economies of scale. When we mass produce stuff, you know, it's a basic common sense that when you are selling or buying products in bulk in a larger quantity, the per unit cost decreases. Okay, the per unit cost decreases in that case. So of course there will be more efficiency. It will be cost effective for you as well. Utilization of resources is similar points whichever I've discussed are there, so I won't go much deep into it. You utilize those resources better. What you are good at, you produce. What you're not good at, you get it from outside. Simple. Facilitate economic development. Definitely, how economic development basically is concerned with your, increasing of your national income. National income is nothing but the total value of all the goods produced in the country. Okay, all the goods produced, sold, consumed, all these gives rise to your national income. And national income, more it's good for us. So when we sell or purchase accordingly, we get money. The money is involved over here, namely foreign exchange. Okay, equalization of prices. Sometimes what happens, it's a technical point. Equalization of prices, it's a little bit of a technical point. Why? What happens is that, suppose in India is a particular product and the prices of those products are increasing rapidly. The prices are going up, वो चीज महंगी हो रही है. Okay, अब वो चीज महंगी हो रही है, वो किस वजह से महंगी हो रही है? या तो डिमांड बहुत ज्यादा है, either the demand is a lot, or what happens is that to produce that particular product, उसको प्रोडक्ट को बनाने के अंदर you are incurring high costs. Cost ज़्यादा हो रही है, तो maybe that is why the price products are increasing. So when the price product increase, then it is a problem, because then you can't buy. आप खरीद नहीं सकते अगर चीज बहुत महंगी हो जाएगी. So to regulate this thing, what government does is that it allows import of that product. Okay, one thing is getting costlier. Okay, and as a consequence of that, the government may say, okay, you import it. See, these regulations, these controls, these quotas, as we say, are imposed on import regularly. ये जो restrictions है, ये import export पे time and again government लगाती है. जब government को लगता है कि नहीं import कम हो रहा है, तो उस पे उन्होंने what will they do? They will provide more of incentives. They will provide more incentives. So when incentives you get, you produce more, so you can import. Similarly, when the government thinks कि नहीं import बहुत हो रहा है, तो it will place some restrictions. ये ऐसे this equilibrium is achieved where there is equal you reach the equilibrium, the state where both things equal, import equals export, import equals export. Okay, so that is the state of equilibrium that is achieved. So similarly, if the government sees that the product prices are increasing rapidly, it may allow imports, more imports. And similarly, if it sees that there is a decline in demand and there is a decline in prices, you can export it. Because of course, think about it. Right now, market does not is not conducive for you to sell things. So you would rather sell it outside of India where you get more money. Simple common sense. You won't sell it at a loss. अगर मैं example आपको दूँ, property prices, of course it's immovable, but understand कि हो क्या रहा है यहाँ पर, what is happening. If you see the market prices are not that good, you won't sell your house. If your house is for say 50 lakhs, you are getting 35 lakhs from the market, you will say no, I would rather wait. Right? So the exporter is also doing the same thing. What is he doing? कि अगर मैं इंडिया में बेचूंगा, it is a kind of a loss to me. So I would rather sell it outside. तो export ज़्यादा हो जाता. So that is how the prices are equalized. Of course, there is a generation of employment because the import-export procedure employ a lot of people, a lot of paperwork is involved. So definitely employment is generated and harmonious relations between countries. Of course, when you deal with other countries, you become friends, and you may this friendship may transcend the trade jurisdiction. You might cooperate on other things as well besides trade. So harmonious relationships are achieved. Okay, there are problems as well. Suitability of the product for the market. This was one of the points that happened with me very personally, because I myself witnessed how one product is not suitable for one market while it is suitable for another market. I was in Singapore. I have curly hair, so I purchased this a shampoo for curly hair from Singapore. But when I came to India and I started using it, it was like complete negative effect. बाल झड़ने शुरू हो गए थे. Later I realized that L'Oreal had a good reason for not launching this product in India, because the climate conditions are as such that जो मेरे बाल अच्छे होने चाहिए थे वो खराब होने शुरू हो गए. They became more rougher. So all products are not suitable for all markets. So you have to see, test, pilot test, and time and again improve and see if it is suitable for one market or not. So this is one of the problems of foreign trade. You may think, oh, since there are no curly shampoos available in India, let me launch this product in India. But then when people start using it, negative effect is there. Then this product is zero. So who will want this product? No one will want this product. Okay. Changes in demand and supply. Of course, time and again, demand changes, supply changes. So this is a dynamic this environment factor, and again, risk is there. Frequent price changes can also happen. Credit risk is, see, importer and exporter are two parties where one is seller, one is buyer, and we are not talking about local local buyer or seller. We're talking about international. Okay, so there are majority of the times the exporter and importer don't know each other. Okay, they don't know each other, and they have trust issues whether I will receive the product, whether I will receive the payment. There are n number of factors like this that makes it even more risky. So credit risk is basically whether I will be getting my money or not. Because most of the times what happens is that you don't know about the credit worthiness, the credit score of that importer or exporter. Okay, so credit risk is definitely there. Exchange rate may change. I am assuming that you all know what foreign exchange is, and that exchange rate, what exchange rate is. Like, for example, for 1 USD, the Indian rupee equivalent is 75, 76 rupees, like that. I don't know the correct one, but yeah, last time I checked, it was 75, 76. So like that, you deal with foreign exchange. You are giving them rupees, they are giving them, you are getting them dollars, like that. So multiple currencies are involved. So exchange rate can fluctuate every hour, every minute, have every 10 minutes, 5 minutes, the exchange rate can go up and down. So if you want to protect yourself from this, it's better you get into a contract where at the time of getting into the contract, you take into account that exchange rate during that particular time. Okay, rules, regulations change definitely. Uh, this example I can also give, like something like in our family business. Sorry, in our friend's family business, he was working in Australia, and there was this call center he was operating. Basically, they were soliciting and giving advices over the phone in Australia. That was their mode of this business model. And but later on, the government came up with the policy that no, you cannot give advice on the phone. You have to meet in person, and that's how you can give advice. So there, half of the operations got shut because of that. So one day you are dealing and rules and regulations are not there, the next day these rules and regulations can come, and of course this is how you get affected. So it's a very risky business. Credit worthiness, again the same point, importer and exporter reliability. Will I get the goods? Will I get the payment? So when you deal with it, you have to do a proper background check, look at previous orders, talk to references, and that's how you decide whether I want to get into the contract with this importer or exporter for that matter. Transportation cargo risk, of course, today you have asked for the delivery of the goods, and while the delivery is being done through any mode of transportation, an accident happens. So the risk is there. Again, guys, this risk point you can fit anywhere because risk is pervasive. It's everywhere, not only in business, in general life as well. Whatever decision you take, there are consequences for it. Okay, so they can be like theft, loss of property, like that, and time gap. When you place your order and the time by which you receive your order, there is a huge time gap at times. It can take months, sometimes years, like 1 year, 1.5 year, depending upon what kind of you have taken this. Again, when you are discussing, we'll do the export procedure. Import procedure is similar, so I won't be explaining that. Export one we'll discuss, so you will know ki when the order is being placed and how when export is being done, how many steps are done. Like they recheck it. Okay. So time gap, when you are discussing, you tell them okay, this is the time by which I want. Can you do it? Okay. So time gap is one of the biggest problems as well. Political legal problems, of course, similar. Like I told you guys, these policies can change. So there can be war. There can be any uncertain point which make the trade agreement get cancelled. So like that. India's foreign trade performance, guys. These are very old numbers. You can just go through it. Okay. I won't. There's nothing to explain over here. I would rather explain the regulations. Yeah. So, guys, our foreign trade is governed by a couple of acts. Okay. One of the acts is your Foreign Trade Development Regulation Act 1992. It's still in action. Foreign Exchange Regulations Act 73. It got repealed. It got cancelled. It got deleted. Okay. And in exchange of Foreign Exchange Regulation Act, we have Foreign Exchange Management Act. It is your FEMA. This is called FERA, Foreign Exchange Regulation Act is the short form. The abbreviation is FERA, 1973. It got repealed and FEMA came into place. That is your Foreign Exchange Management Act, 1999. The reason why this happened was when liberalization, privatization, and globalization happened, that is your LPG policy, came into play. This act could not bear the changes. Okay, this act could not bear the changes, so it was taken off, stroke off, and then your FEMA came into place. That is in 1999. And then you have Quality Control and Pre-Shipment Inspection Act, because of course when we are talking about foreign trade, this ships, cargoes, and everything is of course involved. So this act is also one of the major acts. Okay. So some of the regulations I'm going to discuss, although it is under FERA that this should be there, but again, Okay, understand this thing that Reserve Bank is always involved in foreign trade. Okay, you cannot get into foreign trade just by, of course those are illegal ways. There are of course illegal ways, but then you can't do it all the time. Wait, I have not started the recording, I think. Just a second. लग रहा था कुछ गड़बड़ है। Why is it taking so much time? Start recording. Why is it not recording, guys? Taking a lot of time. Is it because of my net? No, my net is good. Okay, now it is recording. Yeah. I asked for your permission to record and I forgot to start recording. Okay. So yeah, where was I? What was I saying? We were talking about regulations, and I was saying that although FERA is not no more into play, but there are certain things that must be done, and one of the things is to involve your Reserve Bank. If you want to do import export, a Reserve Bank will definitely know, because why? First of all, your this foreign exchange is concerned, right? So when foreign exchange is concerned and it is has direct bearing on the economic of the country, so that is why the Reserve Bank will always be into the loop. Okay, so for that matter, you have to take a code number from the Reserve Bank. You need to get yourself registered with the Reserve Bank. Either it's physical goods or software goods, whatever kind of the nature of the goods is, you have to fill up a form in Reserve Bank, give your PAN card, give your proper ID, and obtain a code number from the Reserve Bank that says, okay, you are a registered importer or an exporter, and that the Reserve Bank acknowledges you. I'm audible, right? Because you guys go so quiet. I
Yes,
just,
ma'am.
yeah, yeah, yeah. Okay, so first thing is, one of the regulations that must be done, you have to get yourself registered with the Reserve Bank of India. And again, depending upon whether you are doing import or export, you have to get yourself registered with the Import Authority or the Export Authority of India. Okay, Import Export Promotion Council, there is one authority, so similar, you have to get a license from them. Once you get registered, then you are a proper importer exporter. Okay, you have to get your code number from there. Okay, and you have to renew them for every 5 years. They get renewed every 5 years. Okay, guys, so now we are left in this unit, we are left with export and import trade procedures. I'm going to take export trade procedure because it's a longer it has most all these points are covered from like in import as well. So I'll be dealing with this, and you just read it, you will be able to get it. Okay, so first thing is to receive an inquiry. See, this is not like you have to go in this way only, because it depends at what stage you are. Okay, but these are the points that covers all the things. So first thing is that you receive an inquiry. Depending upon what you want to do, you are you are an importer, and now you want to get some goods from outside of your country. Okay, so first of all, you will find out that who are the people, say in America, who deal in, uh, say tires. No, not tires. Say, uh, let's talk about China. No, 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 not China. Okay, let's keep America only an example and say laptops. Okay, let's say laptops. And now what will happen is that you will find out who is the best manufacturer of laptops in America. Okay, you are an importer. That person is the exporter. Now, this exporter that is in America will receive the inquiry from you, not just you, to say 10 other exporters. The inquiry will be, I want laptop of this description, this features, okay, this screen, this type of screen. I'm going to make it custom or whatever. You send the whole inquiry to it. Okay, Pura, you create your order number, your number of laptops required, okay, the type of components you want the laptop should contain. All these things, all these details are contained in that inquiry. You will send it to the exporter receives the inquiry, okay. And this next step is he scrutinizes the order. He will see whether I have OLED screens or I have normal LCD screens. No, no, no. The order wants OLED screens. So according to whatever is written in that order, the importer will see whether, the exporter will see whether I am able to make it or not. Do I have the manpower? Do I have the time? Will I be able to complete the order in this time? Okay. Now the third point is obtaining export license. See, of course, this is something that is the first thing that you need to do. Without a proper export import license, you can't be dealing into export import trade. Okay. So you have to obtain export license from Export Authority of India in that uh, point. In the fourth one is where you're manufacturing the goods. You say ki, okay, you tell to the importer, okay sir, no worries, we are more than capable of producing say 1,000, 20,000, whatever the number of laptops is.
यस
Yes,
क्या कर रहे हैं?
please switch off your mic.
हमसे नहीं, आपसे बात करेंगे, हमसे तो दिन में ही बात होगी.
Ravina, can you please switch off your mic? Okay, so what will happen is that you will tell ki, okay, we are more than happy to receive your order and we will be providing you this order in 1 year, 6 months, 1.5 year, whatever the contract says, and we will be providing all these components. But you do a thorough check and then you send this order to your manufacturing unit, okay, and you give them a delivery note. You give them a delivery note to your manufacturer, where the manufacturer, in that delivery note, everything will be written at whatever you want to produce and what is the, again, description. See, why again and again this is happening is that because if suppose the laptops are to be produced say 20,000 in number, and by mistake what you do, you instead of,
इसमें ना कुछ स्टूडेंट ना, मतलब जैसे ये क्या कहते हैं, कुछ स्टूडेंट बोला.
can you please Ravina switch off your mic? Thank god.
सॉरी मैम.
No worries, just don't put your mic like that. What I was saying, yeah, I was saying ki why this is happening again and again, because suppose your laptop was needed to have OLED screens, okay, but the producer did a mistake and instead of OLED screens he put LCD screens. Now what will happen, the whole order is gone to waste. Whatever money, whatever time was spent, it is all gone to waste. So that is why every step it is checked again and again. So when the manufacturer receives the good, although most of the cases both are same, some in cases some may be different. So you will be giving them a delivery note where you will be mentioning that these are the specifications required. These are the specifications required in that order. Okay. So now the manufacturing takes place, the goods are being produced, and you have to be very careful. You have to keep on checking again and again that you know nothing is going wrong. Okay. That is a delivery note. You have to send it to them that contains the regulations and everything. Now you have to fulfill exchange regulations. What does it mean? Suppose this order was for say $100 million. Okay, this is the value of the export, $100 million. Now you have to let RBI know that this is the full value of the order, and this is the date when I'll be receiving the payment. Okay, or within 180 days of shipment, whichever is earlier. You have to let them into that period of exchange. Softex is another kind of a form that needs to be filled with the RBI that is concerned with the software's trade. Software import export का जो होता है, that is the for that. Okay, and these are for other physical goods. Now the goods are being produced, okay, and while the goods are being produced, you have to, of course, as an exporter, send these goods. It is your duty as an exporter to send these goods. So what will you do? You will first of all see what is the most convenient way. And since the orders are usually huge in case of export import, you will be booking a ship. Now it depends, you want the whole ship or part of the ship. Okay, so the agreement with the shipping company is the one जिसका ship है, who owns the ship. The shipping company के साथ when you get into an agreement, it is known as the charter party. Okay, and here you are just booking the ship. Okay, this is the company that I want. And again, in this cases, you will be needing the knowledge. You will be needing the knowledge that what is the best ship, who takes this shipment fastest, who is the most reliable, and all that. So in this step, you do that. Then you get the excise clearance and pre-shipment inspection. Excise clearance means you need to pay excise duties, do the paperwork. A lot of paperwork is involved. Okay, and pre-shipment inspection is that your own person goes and sees, okay, this is the ship I booked. This was the part of the ship that I booked, as the case may be, and the ship looks in good condition, does not have any risks for fire or whatever, looks good. So you pre-inspect the ship before shipping the goods. Okay, now the goods are produced, you have to package and mark them. Goods पे कभी कभी लिखा होता है ना, fragile, this way up. So these stamps are put on these goods. That helps them identify. Okay. Appointing, clearing, and forwarding agents. So guys, these people are basically intermediaries. हम लोग कल intermediaries पढ़ के आए ना, तो 2 दिन पहले. Intermediaries are middlemen. These people are basically experts in the field of foreign trade, with relations to getting the custom formalities done, contacting the shipping company, providing knowledge as to which is the best ship, and all these things. So these are the people who are professionals. So sometimes importer exporter does not have the time nor the expertise to do all these things. So they say ki chodo, let us just contact these people and let them do. So they'll be basically taking care of all the paperwork, getting the money in place and all that. So these are clearing and forwarding agents. Custom formalities again, these people will be doing it. Okay, providing your all the payment methods, the address, the bill of lading, shipping bill, all these things will be taken care of. See, there is n number of paperwork that is being done, and I will tell you why we are doing all this. Okay, because one step you miss, your goods will be withheld and put into a dock warehouse. Okay, so you don't want that. So every point of the way you have to see that you have all these papers with you or not. All right. Then you need to get your goods insured. Of course, you have to get your goods insured. The exporter or importer, as the case may be, depending upon who has the insurable interest. We'll discuss that also. आगे जाके insurance में. So you need to get your these goods insured. Place the good on the ship. When you place the order on the ship, the captain of the ship gives you an acknowledgement slip. That slip is known as the mate receipt. Okay? When the captain of the ship acknowledges that this order is on my ship now, the receipt received is called the mate's receipt. And the bill of lading is when the shipping company acknowledges it. Okay, now the ship is in transit and all the goods are on the ship. So that is known as the obtain the bill of lading. It's a very important document because it has all the instructions given to the captain of the ship that this is how you need to take the goods to the importer. Okay, so you get a bill of lading. Done. Necessary document. Okay, this is done. Okay, yeah, and then this is sent to the your importer. Now, once the ship takes off and reaches the importer has to now make the payment. The making payment has two ways. You can as an importer you can make payment by two ways, either by bill of exchange or through letter of credit. Okay, either by bill of exchange or letter of credit. What is a bill of exchange? It is a it's a basically a promissory note. Okay, it is a promissory note in which it is basically written that, say, after receiving the order within 6 months, I will make the payment. It is a promise to pay. Okay, so bill of exchange is the promise to pay. It's a type of a negotiable instrument जिसके ऊपर लिखा होता है कि आज से कितने मर्जी टाइम के बाद, usually it is up to 1 year, say 90 days, 120 days, 180 days, I will make the payment. Or when there are trust issues involved, okay, जब you don't say believe, the importer and exporter do not believe each other, कोई trust नहीं है, तो what they do is that they get the banks involved. Now what will happen is that importer will create a letter of credit, give it to his bank, and he will say कि when the goods are delivered and exporter shows you all the documents, then you release the payment. Okay, क्या हो रहा है यहाँ पर? What is happening? Importer का bank has a letter of credit which basically is for reliability, trust purposes. Because exporter may think कि I am sending the goods, will I get the money? Importer will think I have I placed an order, waited so long, will I receive the order? So there is a reliability issue. Trust नहीं होती है. So for that matter, bank is involved and bank says कि sir, give us the documents, we will release the payment. So that is your documentary credit and the letter of credit. दो तरीके से payment कर सकते हैं. And when export and import is involved, you get special rebates, special licenses की fees माफ हो जाती है, tax concessions मिल जाते हैं, तो it has its own charm. Import trade procedure I won't explain, guys. It's the almost similar thing. Just know this thing that cargo is basically your order. Another name for cargo is order. Okay, and through this order can be dry cargo and it can be liquid cargo. Okay, so it depends, and accordingly you get it packed. We will discuss it in this is transportation and warehousing. Okay, so with this we are over with B3 and B1. I'm going to start B4 and try to complete it today. Tomorrow most probably we will start with finance, that is B2, and then day after that is your government in business. Okay, let us start with it. Okay, it's a very general unit. I'll be explaining it in brief, and if you don't understand anything, you can let me know. Nothing concrete to explain as such, but I'll just be taking you through it. What is a bank? Bank is an institution that deals with money. Okay, it is someone who you go to deposit your money, and in case of need for money, you ask them for money. So two things that a bank does, and basically how you define a bank is an institution that accepts deposits and lend money when needed. Okay, it is accepting deposit from the public and lending money at the same time. You should remember this thing, guys. Ki for a bank, see, at the end of the day, a bank is they're not for free. Of course, they're providing services, so they want to earn money. So when you are depositing money with the bank, the money does not sit there. The bank आगे जाके, goes ahead and invests that money that you have deposited with them into different fields. It can be anything. So when the bank does this function, where it is accepting deposits and in return of those deposits, investing that money at various places with the intention of earning, that is banking. That is a bank. Okay, and when time needed, bank also gives you loan, of course on charges. That is how it's earning money. Bank earns through its interest rates, through its bank charges, and of course by investing your money into various securities and deals and whatever the case may be. Okay, and apart from these two important functions, it is doing ancillary functions like collection of debts, collection of check, discounting of bills. Okay, what is discounting of bills? अभी I told you what a bill of exchange is. Bill of exchange is a promissory note जिस पे लिखा होता है on which it is written कि within this period इतने time में आपको पैसे हम दे देंगे. Within this period we will give you the money. That is a bill of exchange. Okay. And what is you mean by discounting? अब discount bill of exchange में लिखा है bill of exchange says I take the money within 6 months, take the money within 9 months. But when you are doing business, you need money time and again. So what will happen? You will say, oh my God, I have to wait for 6 months. What will I do till then? You take that bill of exchange, go to the bank. The bank says, okay, we will discount this bill of exchange. Now, what does this mean? Suppose the bill of exchange is for 1 crore. Okay? Suppose the bill of exchange is for 1 crore. You go to the bank, you give that bill of exchange to the bank. The bank says, okay, this is for 1 crores. Take 95 lakhs from us. Okay? Take 95 lakhs from us. So this is called discounting of bill, where they are cutting some money because this money will be received within 6 months. And there is a chance of bad debt too. So the bank also has to earn. Okay? So they will put the charge. That 5 lakh is a charge. This is known as discounting of bills. Okay? Type of banks. Commercial bank is the most common type of a bank that we have around us. They are basically who are giving variety and number of services to its customers, and of course they are the most common type of bank that we have. All you where you see 90% of the banks are commercial banks. Then you have cooperative banks, similar rationale as cooperative societies, where the main purpose is self-help. They are this is like few people who come together and they pool their money, give loans where needed, take money where when needed, deposit. And again, this bank is under the supervision of RBI as well. All right, they get concessions and to like tax concessions and stuff. Then land developmental banks, they are basically for long-term credit given to agricultural sector. Regional rural banks for microcredit given to small and marginal farmers. Industrial bank for promoting industrial growth. ICICI, IDBI, all these are your industrial banks. We will be discussing these type of banks in detail in government when we will be doing Unit 4. And central bank is the apex bank. It's the number one bank of a country. In our case, it's RBI. Okay, it is the banker of the banks. Okay, it is the lender of last resort. जब बैंक के पास पैसे नहीं होते तो वो किससे लोन लेगा? वो आरबीआई से लोन लेगा. Custodian of foreign exchange. Remember this thing, whenever foreign trade is happening, RBI, central bank, apex bank is involved always. Role, collection of deposits, making payments, okay, providing loans, providing credit information. Okay, so again, when businesses see majority of the business, like 99%, I would say, of the business is being done on credit. Credit का मतलब होता है उधार. Okay, उधार पे business होता है, credit पे business होता है, and that is why this bill of exchange comes into play. कि आज नहीं बाद में पैसे लेना. So when you are dealing with a businessman who you do not know about, you will go to the bank, take information from there. Of course, ऐसा नहीं होता है कि you go and take out anyone's information from the bank. This person will let his bank know that this businessman will come and ask about me. Please give him my credit information to me. So in that case, the banker will provide the information because banker duty, one of the duties is to maintain secrecy. They can't give your valuable information to anyone, but you are going into a business relationship with this party, so they may give the information on your instructions. Okay, discounting of bills I've already told you. Safety, you would all know locker system in banks. So this locker system is very unique, very amazing, where you can keep whatever you want in the locker. No one is going to check these lockers. You have the key, and yeah, but it has a very big downside as well. That if a bank gets robbed and this locker is gone like completely money heist type, bank is not under obligation to pay for that locker. Okay. Collection of checks, remittance of money, that is giving money from one country to another. Okay, what is a banker and what is a customer? Who is a customer of a bank? A person having account with the bank is a customer of the bank. Plus, he needs to regularly deal with the account, regularly make transactions of financial nature, of banking nature. If there is no regularity, you are not customer of the bank. Like when I was in college, I had this zero balance account in Punjab National Bank. I was 18 years of age that time, so I could open it, zero balance account. But after a few years, I stopped using it. I got a notice from the bank. I think after I think 5, 6 years, that since you are not regularly dealing with the account, we are going to close it. So once you receive that notice and you still do not operate the account, you cease to become the customer of the bank, because your account is now closed off. Okay, you need to be regularly dealing with it. Okay, relationship, contract. Of course, there is a contract between the banker and a customer. You on trust give the money to the bank, and bank says, we will be protecting your money. Don't worry about it. You just pay your like keep giving us money, and we'll be giving you interest. So there is a contract between them. Debtor and creditor. Creditor is someone who gives the money. Debtor is someone who takes the money. So banker is the debtor because banker is taking the money from us. We are the creditor. When we want, the banker has to pay. Bailor and bailee relationship. Okay, it's a little bit technical, but bailor is what bailee is. Remember, guys, last class mein I explained you about possession of goods and ownership of goods. में क्या फर्क होता है? You are the owner. You have the title of the goods when you purchase the goods, when you pay the money. You pay for your phone, you are the owner. You give this phone to your friend to make a call. Now this possession is with the friend, but you are still the owner. You take your car to the repair shop. You give the car over there overnight for a couple of days. This relationship is basically a contract of bailment. Contract of bailment. What is happening over here? You are the owner of the car. Meantime के लिए you gave that car to that repair person. Here you are the bailer, and this person, this repair person, becomes the bailee, and it is his duty to repair the good and give it back to you. Repair the car and give it back to you. This type of contract is known as bailment. You don't have to go in deep. Just know this thing. Okay. So what happens is that they are into a bailer-bailee relationship, not with terms of the money. Okay, but in terms of the this locker. When this person, when the bank receives the money from you, he does not become a bailee. Why? Because bailment, in under bailment, you can use the product as well. But then you have to return the good. Okay? Sorry, under bailment, you can't use the product. Sorry, I said it wrong. Under bailment, you can't use the product. You just need to do whatever is asked and return the good. But when the bank receives the money from you, the banker invests that money आगे. That is the basic premise of banking ना. अभी हम पढ़ के आ रहे हैं कि in order to be a bank, आपको जो पैसे मिले हैं वो पैसे आप आगे लगाएंगे, investment करेंगे आगे. If you don't do that investment, you are not a bank. So in case of money, the bank is not the bailee. The bank becomes bailee only in case of locker, where you give your valuables to the bank. Okay, just know this. This is enough. Trustee beneficiary relationship, of course, you trust the bank and the bank has to do whatever is you have asked for your benefit. Principal agency, I have already explained. Principal is the person who gives order to the agent, and agent, whatever he is doing, is on principal's behalf. So agency functions are like collection of rent, collection of checks, collection of interest, dividend, etc., which the bank does on your behalf. Duties of a bank: obligation to honor checks, of course, bounce nahi hone chahiye check. maintain secrecy, as I was telling. The bank will not go on giving your credit information to anyone. Only if you ask, this information will be given. Otherwise, it will not be given. Okay? Customers' instructions, whatever the bank receives, he has to follow. Standing instructions, जिसको हम बोलते हैं, standing instructions. Whatever instructions you are giving to bank, you say stop payment. The bank will stop the payment. You say collect rent on my behalf. The bank will collect rent on your behalf. Okay? Obligation to maintain proper records. जैसे passbook है, all these records needs to be maintained, and notice before closing the account. जब आप account close कर रहे हो, तो you have to close it. Okay. Rights of a bank. Generally, again, guys, this is a contract act का point. General lien. Lien is basically of two types, but अभी हमें सिर्फ generally करना है. What is general lien? I'll give you an example. Suppose you have taken a loan on a car, okay, and you are making installment. You're making installment payments. You made 2-3 installment payments and you stopped. Now what will happen? The bank will come. They will take that car from you and do whatever they want to so that they can get their money back. This is general lien. Lien is basically a person's right to retain the property until you have not made the payment. So that is your general lien. Okay? That is your general lien. Yeah. General lien is basically on these goods, and whatever valuables you have deposited in the locker, the general lien won't be applicable on that. Right to set off. Suppose you have two accounts. Say you have a current account and a saving account in a bank. Current account has a negative balance. Saving account has a positive balance. The bank has the right to set it off. Suppose your current account has 8,000 balance, where your saving account has 10,000 balance. So the bank can set it off, and your net balance in the bank will be 2,000, like that. Right of appropriation. See, there are n number of charges that a bank takes from you. Card charges, delay on payment charges and all that. So if you have not given any specific instruction to the bank can appropriate this amount from your account without your permission, because this is a right of the bank. Charging you interest and commission and right to close the account. Bank account types, again, I'm not going to explain this. These are very common, and I take by now that you all must be involved in banking in one way or the other. So you have demand deposits and time deposits. Recurring is where you are investing the money, same amount of money, monthly, quarterly, yearly, up to you. Fixed deposit is where you have fixed this money for a certain period of time. You will be getting interest on that. Saving account is like you can take the money out whenever you want. Least interest is on saving account. Current deposit is basically for your businesses, where the amount required is huge. Okay, I'm not explaining these accounts. Okay, how do you make payments? Through check. Check is a negotiable instrument. Okay, it is a type of bill of exchange that is drawn on a specified banker. Meaning, every bank has a checkbook. Every check has name of the bank on it. So it's a specified banker. You would know that this check is of IndusInd Bank. You would know this check is of TNB, because उसपे लिखा होता है. And you pay it on demand. Whenever you show it on demand, you demand the money, only then you get it. So that is what is meant by demand. Okay, that is one way. And type of checks, that cross check आता है, blank check होता है, and you have to place your account pay, all that. Okay, pre-dated, post-dated check. Earlier, 6 months validity was there, but now within 3 months the check becomes a stale check. Okay, if you have not shown the check within 3 months, it becomes a stale check, meaning you have to draw a new check. Bounce off check is a criminal offense. It simply means that you don't have enough balance in your account and you have given a check to someone. So it is a criminal offense. I know many people who are fighting case right now because of the bouncing of the check. And it's been 5 years since this case is going on, and I don't see it getting over anytime soon. So please be very careful when you are writing checks. You must have enough balance. Drafts, see, in case of checks, it can bounce, meaning you don't have sufficient balance. So to cater this problem, drafts came into play. A draft can only be taken out on a specified person if you have enough balance in your account or you have paid upfront. आपने पेमेंट कर दी है तभी ड्राफ्ट बनेगा. It's a short way of receiving money and without the problem of bouncing. Usually in government institutions, your educational institutions, they require draft instead of checks. Okay. Then you have standing instructions that I already told you. Whatever instructions you are giving it to the bank in writing, telling them this is how I want things to be done. Don't make payment to this person. Don't make this person. Stop the payment. Collect rent on my behalf. Take interest. All that. Advances, loans. The most important feature, apart from accepting money, is giving money. So you have to give loans. Loan is what? It is an advance granted by the bank in exchange of certain amount of payment, which is known as the interest. Short term, medium term, and long term loans are there. Short term is generally up to 1 year. 2 to 5 years is your medium term loans, and long term loans are more than 5 years. The loans can be given against a security, or it can be secured loan or unsecured loan. Unsecured loan will be where there is no collateral. गिरवी नहीं रखा आपने कुछ. A secured loan is where you have kept something as collateral, kept something for security purposes. Sometimes we go to the bank, we say, हमारा घर गिरवी रख लो and give us money. So that is a secured loan, where if the bank does not get the money, it can sell off the house and take its money back. Here, general lien is used by the bank. Okay. Overdraft facility is where you are exceeding the amount that is allotted to you in case of a current account. Okay, overdrawing your bank account. Whatever credit card की अगर मैं बात करूँ, if I talk about credit card, it's basically an overdraft. What is happening? That you are taking the money that does not belong to you, that belongs to the bank, and you are taking it on credit for some period of time, and you return that money. If you don't, you will be giving high interest rates. Apart from that, you get cash credit. Cash credit again depends upon your credit score, your credit worthiness. Okay, here some money will be given to you. Say suppose predetermined by the bank, say you receive a cash credit of 10 lakhs. Until and unless the whole 10 lakh is there, you won't be charged anything. Suppose you withdrew 2 lakh rupees from there. Now you have to pay interest on those 2 lakhs. So this is cash credit. Okay. Again, you have to keep something against it, like कुछ ना कुछ चीज गिरवी रखनी पड़ेगी. Okay, that is your cash credit. Discounting of bills I've already told you. Okay, modes of creating charge. Guys, तीनों चीजें, whatever we are doing, pledge, hypothecation, or mortgage, these three things are similar. Here, you are just taking loans from the bank. Okay, in one or other case, you are either giving something as collateral, meaning some कुछ गिरवी रख रहे हो आप, or you are not. So when we talk about movable property, the property that can be moved, like your gold, like your car, it can move from one place to another. So it's a movable property. So this thing moves from one place to another, and you are keeping it as a collateral, as a security against the loan. Okay, यहाँ पर ये चीज हो रही है. So pledge के केस में, in case of pledge, you are parting away from the product. The possession of the product is going from the owner to the person giving loan. Gold मेरा है. I am the owner of the gold. But I want money. So what will I do? I will go give my gold, take money. This is pledge. Movable property, first thing. Second, you are parting with the good. The possession of the good is now with the lender. This is Muthoot Finance. I'm sure सबने सुना होगा. Is one of the like institution that gives this loan against gold. So pledge is case of Muthoot Finance. Similarly, if you are not parting with the good, but you have kept that good as a collateral, that is called as hypothecation. Like in case of a car loan, the car is with you, but the day you do not make payment, the car will be taken away. So this is hypothecation. गिरवी रख रहे हो, तीनों चीजों में गिरवी रख रहे हो. बट एक केस में प्रॉपर्टी आपके पास है, एक केस में प्रॉपर्टी आपके पास नहीं है. अभी तक हमने मूवेबल प्रॉपर्टी की बात की थी. अब इमूवेबल प्रॉपर्टी की जब हम बात करते हैं, so that is your mortgage. ओके, आई एम श्योर मॉर्गेज सबने सुना होगा, बिजनेस या मोनोपोली सबने खेली होगी, तो उसमें मॉर्गेजिंग होती है. ओके, सो यहाँ पर इमूवेबल प्रॉपर्टी है. आपने घर को गिरवी रख के जब आप लोन ले रहे हो तो वो मॉर्गेज का केस है. ऑलराइट, अदर सर्विसेज में कलेक्शन छोड़ दो, ये लीजिंग बता देती हूँ. लीजिंग में क्या होता है, सी आज की डेट में इन टुडेज टाइम the banks are heavily into leasing business, meaning they will buy properties throughout the country and they will give it on rent. And what is different in leasing is that the time period is a lot, like 50 years, 100 years. Okay, so the owner is called the lessor and who uses the asset is called the lessee. Like जितने जितने बड़े cinema halls है, you have these big hotels, they are given on lease. The owner may be someone else, but for the time being you are operating that property, you are using that property, so that is a leasing contract. Tax consultancy, of course, you go to the bank and you hire them for your tax purposes, tax saving purposes. Merchant banking services where the securities are involved, you may hire banks to do underwriting for you, to raise capital for you. Okay, basically business people get into merchant banking more than the normal people because they require huge money, huge credit card. I'm sure you know, it's a card which again provides you with the overrun facility of your account. Okay guys, this is done with. Now coming to next unit, that is your insurance. Okay, when I started these classes, I told you guys that risk is pervasive, it's everywhere in a business, and you cannot eliminate risk, but very surely you can mitigate it, meaning you can reduce the risk, but you cannot completely eliminate the risk. Okay, so what is business risk? Business risk is something that you don't know about. Fear of unknown. Should I let this person join? Yes, Rishikesh, you have a question? I'm audible now? Yeah, you have a question? Mm-hmm. Mm-hmm. First of all, they are in severe debt crisis. The problem, they got a lot much into debt financing. Okay, meaning paying off debt through debt, and the government had a very bad policy of giving things for free. If you go into the history of Sri Lankan politics, you will see that they give this thing free, electricity free, this thing free, and apparently what happened is that they ran out of money. They kept on taking debt, trying to pay off the debt through debt, and this is what is happening. And what are they currently doing right now? They are just God help them. Okay, so whatever. Yeah. Uh-huh. No. Tourism is full on. Tourism is full on. See. Again, this is something which is not related to our syllabus, but let me tell you that it is their policy. Of course, tourism is their main source of bread, no doubt about it. They were hit during COVID, but right now the major problem was also giving things free. Okay, so tourism is back on track, but the debt is so much that their internal this monetary situation is as if that things are getting very expensive for them. Okay, yeah. This is not concerned with our this thing at all. Yeah, yeah, yeah. See, securities, it again depends what they have, but the general thing that they get loan against is gold, foreign exchange. Through against that they get the loan. But again, I'm pretty sure they have exceeded their limit of taking the loans from I think IMF and World Bank, and I mean the countries throughout the world are helping them, but they are in again huge debt crisis, and let's see what happens. All right. Coming to this, yeah, business risk. It is the fear of unknown. The fear of unknown, the uncertainties that lies in the future that you can't predict at a particular moment of time. That is basically business risk. Risk. Sorry. And business risk comes when you, through this uncertainty, through this fear, you lose money. Okay, that is a business risk. You don't know what will happen tomorrow. Like I give you an example. I'm pretty sure something God of sorry, this was the movie. Oh my God! Oh my God! Everyone would have seen. No one knew that tomorrow this earthquake will come and his shop would be completely demolished. Okay, so this is something uncertain. You can't predict it again. But he got the insurance done. Okay, he tried to mitigate it, but then again, what wrong thing happened over here was he got the wrong insurance policy done. Causa proxima. I'll explain this. But for now, just understand what is business risk. When you lose money due to uncertain events, due to things that you can't predict, which are not in your control, that is your business risk. Okay. Pervasiveness again means that it is everywhere. You can lose the building where you work. You can lose good employees. Other companies may take away your employees at a better rate. They offer better salary, better environment. So property and personal risk, marketing risk. You are creating the best product, doing the best expenditure that is there is to let people know that you are here, you have arrived in the market, but people still do not buy your product. The marketing risk, financial risk. People are buying your product, people are taking your product on credit, no one is paying, everything is going in bad debt. You become insolvent because the debt is so much. Production risks. You are producing your manufacturing plant catches fire, it there is a tsunami, gets completely waterboarded. That is your production risk. And environmental risks. Government policies, environment can be internal environment, external environment. So there can be policies like inside the government, they could be inside your company. They could be plotting against you to overthrow you, or the government regulations keep on changing time and again. So environment, internal and external, both can lead to uh, these risks. Okay, type of risk, if I may say, there are two distinctions that we do. One is pure and speculative risk, and other is dynamic and static risk. See, pure is a risk in which there will be only negative thing done. कुछ अच्छा नहीं निकल के आएगा. You will lose only. Like in case of an accident, a person will be injured. There is nothing good coming out of it. So it's a pure risk. Only loss occurs. It's a pure risk. Okay? Speculative risk is you may either get something out of it or you may lose. So it's something that is basically a lose-win situation. You are launching a new product. It may take off. It may absolutely gets washed away. Okay, so speculative risk is either gain or loss. Pure risk is only loss. Pure risk can be static risk, and dynamic risk can be speculative risk. Dynamic risk is risk that is based on the environment of the business, which is not in your control. Static risk is which is at one position. There are no changes in the business environment, and still you are losing. Okay, so pure risk is rated with static risk, while your speculative risk is associated with dynamic risks. Risk classified by these are basically types. Okay, so one was this distinction, other is less severity. Okay, the type of loss which does not affect your finances. Then there are type of losses that may little bit pro- be problematic for you. You may borrow money in this case and protect yourself. And the third case is that the loss is so huge that you have to shut the business down because you're going bankrupt. Then you have objective and subjective risks. See, objective risks is what? What did you anticipate the risk to be? What did you expect the risk to be? And what is the actual loss? Suppose you thought that okay, if I produce this phone, I will on a maximum say lose 1,000 phones due to transportation and cargo. This is your expected risk, expected loss. That majority, whatever happens, whether this thing is coming, whatever through its transportation is being done, maximum number of units that might get damaged or lost or stolen, whatever, is 1,000 units. But in actual, you lost 900, or in actual, you lost 1,100. So that is the objective risk. The basically the variation between the actual loss and your expected loss. Whilst subjective is completely based on the perception of the individual. Like for me, cryptocurrency is very risky. But for you, the cryptocurrency is very stable thing, very forward-looking, futuristic thing. So the subjectivity comes into play. And whenever we talk about risk, we classify people into three types. I told you guys that there's a positive relationship between risk and return. The more risk you take, the more return you get. It's a upward sloping curve, okay, and it's a positive relationship. The more risk you take, the more return you get. So, going by this, we bifurcate people into three types. One is risk averse. Basically, this person doesn't want to take risk. He's aversive to it. He would rather go for a fixed income than fluctuating income. He's a risk averse person. The other person is risk lover. Okay, this person will go ahead and take risks. The basically general entrepreneur. He's like, if I don't take risk, I won't grow. I will take risk. So he's a risk taker. And the other person is the combination of the two. Risk neutral. Okay, so this person will sometimes invest in securities and sometimes be also investing in government bonds. Like he gets a stable income. Okay, so here the subjectivity comes into play. Risk management. Okay, there are few steps that you do to manage your risk. First is identification. You need to identify, okay, I'm investing in securities of a listed company. It's a new company. I don't know if it will be doing me any good. Will I be earning? Will I be not? Okay, this is the maximum risk which may happen. So these questions you ask yourself and you identify the risk. Okay, there is risk involved and these are the consequences that may happen. Okay, then you have to tell yourself that there may be a financial loss associated with these risks. I may lose this much money, I may lose that much money. And then you employ certain tools to protect yourself. Okay, so the first is risk assumption or retention. Here you are being very proactive, very cautious, and you know that okay, if I invest in an unlisted company is a company which is not listed on a stock exchange. That is why it is unlisted. I may lose a lot of money because, of course, there is no confidence in the firm and it may be a fraud. So, you know the risk. You have assumed the risk. So, you will be cautiously not investing in it. You will say, no, 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 both risk. It's a lot of risk. Let me invest in a listed company. So, So you are assuming the risk and taking appropriate measures over here so that the loss does not happen. Okay? Here you know about the risk and you are taking all the conscious decisions so that the risk does not happen, the loss does not happen. Another is loss prevention. Of course, this is another way where you know the, the loss can happen. So let me take precautions that the loss does not happen. Suppose you have a building, okay, and you know that the wiring of this building is very old or the structure of the building is very rickety. You will get it repaired. You will get the wiring changed so that the loss does not happen. So you are preventing the loss over here. Now you are avoiding the loss. How you are avoiding the loss? You know that if you go to Ukraine right now, you might die. Why would you go to Ukraine right now? So you're completely avoiding the risk. You're not doing it at all. Transfer of risks. Suppose you have, say, a lot of goods in your warehouse, and you know that anything can happen, so you can take out an insurance. So what you are happy, what you are doing, you are transferring the risk from yourself to the insurance company. So here you are transferring the risk. Separation is that you know that you have 5 warehouses. Why are you keeping all your products in one warehouse? Keep them in five so that maybe one gets this one warehouse gets fire, the other products are safe. So you're separating the products so that you minimize your risk. And n number of combination strategies of the above points you can take. Time and again, of course, you have to evaluate whether you were successful in taking or mitigating your risk or not, and what was the result out of it. So you evaluate your risk implementation as well. All the points that we have discussed time and again. You see whether it was a good decision to prevent the loss. It was a good decision of not taking investment in an unlisted company. So you evaluate them. Okay. All right. So now we come to insurance. Okay. So this word, honestly, I hate now personally because I was victim of insurance fraud. Not not even a year ago. I think my policy was taken out on 17th November. Yeah, 17th November 2021. And by God's grace, I was, since I knew a lot of about law and everything, so through a lot of mails and calls, I was able to get my policy. But let me warn you, take insurance very, very, very carefully. Don't sign anywhere except on your policy. Don't sign even on the proposal of the policy. Don't sign. Or if you sign, it's okay. When you get call from the agents, ask for the soft copy or the hard copy at the earliest. Read the documents properly within the free look period of that insurance and then decide. My agent from IndusInd Bank told me that this policy is only for 5 years. You can withdraw your money after 5 years. You are supposed to pay only for 3 years. I got call from Tata AIA. They told me that the policy is for 17 years, not three or 5 years. 12 and 17 years. You have to pay this much money for all the years. If you withdraw earlier, you won't get any benefit. There are no tax benefits. And I swear to God, it was a nightmare. So please be very careful when you are signing or giving your signs or video that I accept the terms and conditions. They're very smart people. They'll come, they'll take a video of you where you will be saying, okay, I accept all the terms and conditions. And this is how they play you. And taking insurance is good, but please keep these points in your mind because I have personally suffered. They made a complete fool out of me. They kept saying that we will be coming to your place and explaining the proper final document of the policy in hard copy to you. And later they were saying, no, we send the soft copy that is equivalent to hard copy. No one told me that. Just be very careful, guys. Yeah, coming to
लाइफ
insurance.
इंश्योरेंस हेल्थ इंश्योरेंस
Huh?
मैम हेल्थ इंश्योरेंस था या लाइफ इंश्योरेंस था
It was a insurance, a life insurance linked plan, Tata AI value income plan.
Okay, ma'am.
Okay, so what is insurance? Insurance is basically a contract between two parties called insurer and insured. Here, the person is basically transferring the risk from one person to another in exchange of a payment known as premium. Okay, again, you are trying to mitigate or reduce your risk, but you are not eliminating it, because once these people come and check the actual loss, you do lose some money. You don't get the full value always, so you do lose some money, but it's the closest thing that we have to reducing risk. So insurance is very common, and it is a good thing, but then deliberately, in just to uh, fulfill their sales goal, the bank people are in themselves uh, you know uh, getting into these malpractices where they are telling their employees to do like that. So what happened with me is very common, and yeah, so just be very careful about it. Okay, so that is an insurance contract between two parties where this one party says ki we'll make the good the loss. Remember this line, it's a very important line, guys. Make good the loss. This line. Undertake to make good the loss. Okay, make good the loss. ये चीज याद रखना है, because you have to write this thing. It's a very important line. I'll because it's basically one of the important principle of insurance. Okay, so the important question that we get out of it is your what is insurance, what is an insurance contract, and what are its principles. It's a very important question, guys. So difference between assurance and insurance. See, though both things are same, but when we say life insurance, that is called assurance with an A, not an I. Okay, why? Because it is assured, pakka hai, this person will die. We will all die, right? We will all die. So there is 100% assurance that this person will die one day or the other. So that is why life insurance contracts are known as assurance contract. Okay. So if the question says, what do you mean by assurance contract? Don't get confused. Don't think ये तो पढ़ा ही नहीं है. Simply you have to write about life insurance. Okay. Okay. Insurable and non-insurable risks. See, insurance is a business. At the end of the day, they are sitting there to earn money. They are not idiots. They are not crazy people who want to do good for you. No, they want to earn money. So they will be insuring things which they know has a high probability of making them pay money. My dad is 74. I am 32. Okay. This insurance person told me कि dad की policy नहीं निकल सकती because he's well aged. But you can, because I am healthy. I am younger, so I can take an insurance policy easy. So they have these things in their contracts where they will insure the person, healthiest health of the healthiest person. The preliminary health checks will be done. They will ensure that you have nothing, that you are absolutely healthy, and then they will give you the insurance. So of course it's well within their right to do that, to do all of this. Okay, because at the end of the day it's a business. So they will insure if there are larger pool. See, insurance works on the principles of pooling of risks. 1,000 लोगों ने हेल्थ इंश्योरेंस ली है, 1,000 लोग बीमार नहीं पड़ेंगे. एक पड़ेगा, दो पड़ेगा, 10 पड़ेगा, 100 पड़ेंगे. Not all. They work on this principle. I'm going to deny the entry now. Okay, it's 8:30. I'm not going to accept. You want attendance? You just log in through the last of the class, and now this is not done. Let me tell you guys, from tomorrow, like okay, only 2 classes are left, but still this is not done. You don't. Yeah, no. I'm going to deny that. I'm not going to accept. Okay, so insurance is basically done where there is a large number of people who are taking insurance policies within one geographical area. Okay, it should be spread over. Of course, one geographical area. and there are a lot of people who are taking the insurance. There is insurable interest, and something which is control not controllable, but then depending upon the terms and conditions. Like, oh my God, happened. Okay, he did take the policy, but then the causa proxima was not appropriate. He took all the problems, but not act of God. Okay, so when you are taking the insurance, you have to see what all terms and conditions are there, and accordingly you see and sign it. Because if you have taken an insurance policy for theft and your building catches fire, you won't be getting any money. Okay, it should be measured. The loss can be measured and under a pool of people. But which is not covered, which is known as the non-insurable risks. That is your risk due to war, risk that cannot be foreseen, like change in demand, change in taste, change in fashion, and frequent risks, like frequently if something is happening, they won't be taking this into account as well. Okay, so the risk, sorry, the if you have to get insured, it should be something that can be insured. Okay, the insurance contract, again it's a contract agreement between two parties, insured insurers. Conditions, terms and conditions are all written in the this contract. The proposal is first given. I was only given the proposal. They told me they'll come at my place and read out the final document. They never came to explain anything. So don't sign the proposal or read the proposal. Tell them, explain the proposal first. Okay, so the proposal is basically preliminary insurance contract, basically, where mostly whatever terms and conditions that we have agreed on will be written in the document, and they'll be basically taking your signs over here. Please don't sign the proposal. It is not required to sign the proposal. The cover note. Till the time you are reading the proposal and deciding on that you want the policy or not, the cover note basically gives you insurance coverage during that period. Say you want 10 days. So you will be getting insurance for 10 days. That is your cover note. The policy again contains all the terms and conditions, and that is the final document. These days, only soft copy they send, and then they forget it. We also think कि नहीं soft copy है, कोई नहीं घर पे आके hard copy देंगे. They will read it out, but नहीं. So if you receive the soft copy, it is equivalent to hard copy. And a free look period generally is there. Free look is basically आप decide करो कि चाहिए कि नहीं चाहिए आपको, and you can cancel the policy within the free look period. But it is a very difficult process. I mean, I really just got lucky that I was able to get my money back. So be very wary of it. Basically, I received a call within 15 days of the policy, like the proposal. I signed the proposal. In 15 days, I got a call from Tata AI people, and they were saying that whatever they told me was completely different from what I was told from the bank. So I knew something was up. I kept on messaging my agent that ऐसा ऐसा हो रहा है. She's like, don't worry, जो हमने बोला है वही सही है, वही सही है. I have all the chats with me. I have everything, all the this evidence I have with me. So I knew something was fishy, and I kept on pursuing them. And it took me 6 months to get my money back. 6 months. So please be very careful. Yeah, components of an insurance contract, guys. Declaration. Okay, this is very simple. Nothing. You don't need to be like signing all these things. Insurance agreement, limitation, exclusions, conditions, blinders. Okay, but okay. Yeah, this is the most important topic of your insurance. Besides your types. So, principles of insurance, guys. Okay. The edifice, the rationale of insurance. What makes the insurance, feasible. I told you guys अभी ऊपर to make good the loss. ये चीज याद रखनी है. To make good the loss. So first and foremost important principle is of utmost good faith. You should be getting into an insurance contract based on trust. You need to disclose all material facts regarding your property to the insurer, and the insurance company must also reveal all these terms and conditions and choti formalities that are taken advantage of, like in my case. to you. So it's a principle of utmost good faith. You have to be very truthful. Like suppose you are getting your this building insured, and you know that this building has very rickety or like not good this structure, and it may collapse. Or you know that there are a lot of thefts happening in your nearby surroundings, or your wiring is not good. So you know all these things, and you still don't tell the insurance company. So this is not good. Okay. Similarly, when the insurance company is coming, that they have to disclose all material facts to you, छोटे से छोटा, which basically does not happen in reality, as I've experienced. So this is the principle of utmost good faith. Because later on, if these people come to know about this thing happening, so they may no, refuse. They may refuse to make payment to you. They may refuse to make payment to you. Okay, so this is utmost good faith. Okay. Okay, this is repeating itself. Second one is your okay, proximate costs. As I was saying, in Oh My God, the only reason why Paresh Rawal could not get the money was because he got insurance for fire, theft, but not for act of God. So whenever you are getting insurance done, it has to be the proximate cost, the nearest cause. And if the cause is not the nearest, you won't be getting anything. Simple example, फायर इंश्योरेंस कराई है, if you have got the fire insurance done and आपके यहाँ पर चोरी हो गई है, so you won't be getting any money. Also, when you are getting the fire insurance done, it has to be the proximate cause, like fire due to ignition or fire due to arson. All these things, the cause needs to be written. Only then you will be getting the money. So the proximate cause needs to be there. Insurable interest. Guys, insurable interest simply means that when you are taking the policy, you should have you should be the one who is going to be directly affected by the economic loss. It is your building, you are getting insured. You won't be getting your neighbor's house insured, right? अपने neighbor का house तो insure नहीं कराओगे ना. You will be getting insurance for your house, for your building, for your property, something that will affect you directly. So insurable interest needs to be there. So in case of say your wife, okay, your brother, your dad, your parents, you have direct insurable interest. If anything happens to them, you will be affected. So you can take out policy. Whilst for your neighbor, you won't. So when you are taking the policy, the insurable interest must be there. Okay, indemnity to make good the loss. Here you have to keep on writing this line, to make good the loss. Matlab, indemnity says that through insurance, we will bring you back to that point of time where there was no loss to you. हम time travel कराएंगे आपको through insurance. We will be helping you time travel. How? We will take you back to the time at a position where no loss was there. Suppose you had a building that was insured for 1 crore. Okay, there was a building that was insured for 1 crore. Now these people will come and they will say, see what all the losses was there, and they will say, oh, loss is of 1 crore. They will give you 1 crore. Loss khatam, bach gaye aap. So this is what indemnity say, to make compensation basically. Okay, here this person is making compensation, but compensation so that you are at a footing as you were before the loss. If you lose 1 crore, you gain 1 crore, you are at an equilibrium. You are not making any profit, you are not at a loss. You are at the same position where you were before the loss. So indemnity says that. Okay, and then there is another principle called subrogation which flows from this indemnity. How? Now you will say कि मेरी 1 crore की building, my 1 crore building got destroyed by fire. Now sometimes the fire department reaches on time and they are able to salvage a lot of your products, salvage a lot of your say goods and goods and lot of your say the structure is still okay. The structure is still okay. Okay, you can say make do with the first floor or the ground floor. You can make do something. You can do it out of it. Now the insurance says कि okay, we have insurance, you have coverage for 1 crore, you will get 1 crore, but we are going to take this building with us. Whatever is in this building is now belongs to us. So this is the principle of subrogation that says you will be not making any profit out of it. You got insurance for 1 crores, you got 1 crore, ram ram, jao, ho gaya. Now this building, the right of ownership of this building will be transferred to the insurance company. Okay, so the property passes on to the insurance company. So here they say कि make good the loss, मतलब जितना compensation चाहिए उतना दे दिया है. Now you won't make any profit because otherwise think about it. You are getting 1 crores, and on top of that, goods worth rupees 5 lakhs were saved. So now here is this 5 lakh is your profit. Okay, so this is not allowed by insurance. They take their ownership of that property, whichever is there. They can do that as well. They can see, it is up to them. I'm generally speaking whatever thing is being salvaged and whatever coverage you have being getting, you will take that, and whatever is left of that property will be transferred. The ownership of that will be transferred to them. It's up to them how they do it. Principle of mitigation of loss. Now insurance says you have to take all the proper care, all the proper precautions कि loss हो ही ना, कि loss does not happen. I don't know how many of you would have seen the movie Gambler, Govinda ki. If anyone you would have seen, Govinda in that movie tries to deliberately die on duty. Gambler is a very old movie, Govinda ki. And in this movie, Govinda tries to die on duty. Why? Because if he dies on duty, he will get a lot of money, insurance, a lot of money, and his family can be saved. He had terminal cancer or something in the movie, so he tries ki let me die on duty. If I die on duty, I will be getting a lot of insurance money. That was the condition ki he has to die on duty. So he was not taking any precautions. He was going and beating the hell out of big gangs and see the fate. He was not getting shot at or nothing like that. He was actually getting people started to actually get scared of him. इसको डर ही नहीं लगता किसी चीज से.
Ma'am, Gambler came out when after I was born. You're making me feel very old by saying it is a very old movie.
It is a very old movie. I was a kid that time when I saw it. So yeah, it is an old movie. Because I think in the 90s. And many of you of course born after it. So yeah, that movie has this thing. So he basically takes no action, and he tries to not mitigate the loss, rather presume the loss. So this is one of the insurance this principle. It says that you have to take care. You have to change the wiring of the building. You have to make sure the guards are there. You have to make sure that the water sprinklers are there. Time uh, like equal spaces may you have the fire extinguisher. You need to be that, because if this company comes and checks and sees that the precautions were not taken, they can deny the payment. They can very well deny the payment. Okay, so mitigation of losses is very important. Okay, coming after this, we have types of kinds of insurance policies, which is primarily bifurcated into life, marine, fire, health, motor insurance. See, the best thing about insurance is that you can get most of the ridiculous things insured. People who sing, they get their throat insured, vocal cords insured. People who play piano, they get their fingers insured. People who play football, they get their feet insured. So you can get whatever you want insured. Okay. Then again, it is up to the insurance company. You will of course come up with a contract, come up, decide on a payment premium, how much premium needs to be paid, and you can get anything insured. It's up to you. Okay. So bifurcations can go to the nth list. It's not exhaustive, but these are the major bifurcations that we do. So one is your life insurance, marine insurance, fire insurance. So life insurance, as you all know, is on a person, because time and again it is a well-established fact that we all will die. If not today, maybe tomorrow. If not tomorrow, maybe sometime other. But we will be dying. So that is
So
why
does that make it an assurance, ma'am?
yeah, life insurance is a case of assurance. Okay, because it is assured that you will be dying one day or the other, that this person will be dying. Okay, so when we take out a lot of life insurance policy, it depends upon what kind of policy you are taking. So there are, okay, insurable interest. So when you are taking the life insurance policy, there should be insurable interest occurring, meaning that if this person dies, you will be directly affected. Okay, so of course you have unlimited insurable interest in your own life. तो अपना आप ले सकते हो. You can take for wife. Okay, similarly for her husband she can take, children. Like this is a list that covers who can take policy for who. Okay, and these are assurance policies. So if a question says assurance, please घबराना नहीं है, just write about life insurance. Okay, you can give the rationale. It is assurance, it is assured thing that a person will die today or tomorrow. So that is why the policy of life insurance is known as assurance policies. Okay, type whole life policy. Okay, like you take out for a life fixed period. Okay, you pay periodic premiums for it, and you get the money either on death or basically on death you get the money. Endowment may, it's for a specific period, say 10 years, 20 years, and or death, whichever is earlier, you get the money. After that, you have term insurance. Term assurance policy is basically that when up till a specific date, if something happens, you will get the money, otherwise you won't. Like suppose you took out a term assurance that said, if I die within 5 years from today, you will be getting the money. Otherwise, whatever sum you have paid will go to waste. Like travel insurance is the very good example for this. What is travel insurance? Suppose you're traveling for two weeks. Okay, this has happened with me. We were traveling to Hong Kong for 2 weeks. We took policy for 2 weeks. Okay, but by the time I came to know that my baggage was destroyed, जैसे वो फेंकते हैं ना उठा के, how they throw the luggage, I came to know, I noticed it later. So since that 14-day period was expired, I could not claim it. So stipulated time period, if the loss happens, you will be compensated, otherwise you won't. So that is term insurance. Joint life policy, when two people have insurable interest in each other's life and they can take out a policy, like husband wife लेते हैं साथ में. Group insurance, basically the companies take, large companies, it's called a master policy as well, कि पूरी organization की policy एक साथ निकाल दी. So this will be a group insurance for you. Children endowment, like they will be taking policies for children as well. Again, lump sum payment और marriage तक basically होता है लड़कियों के केस में, और over a specific period of time. That's endowment आ जाता है ना, word endowment. It basically means at an earlier date, about a certain age. That you are of a certain age, you get that money. Annuity policy is basically taken again for age, but it is taken up by the people who are about to retire. So annuity fund उसको बोलते हैं. तो annuity policies होती हैं कि आप retire हो जाओगे, then you'll take it out. With profit, without profit, जैसे मेरा केस था income value plan वाला. Here I was getting cash bonuses, because what happens is that even be it either your banking business, be it either your security business or whatever business, even insurance business, they take that money in form of premium and they invest it somewhere else. Whatever money we'll be giving to them in case of as a premium, they will be investing that money आगे जाके. So when they earn good, they give you profit. So my policy was for like included cash bonus. Like if there will be like minimum percent of interest you will be getting was 8%, and then up to 22% like that. So the policy can be with profit, like in my case, or without profit. That you won't be. Basically, these are called as market linked plan. Participating product, non-participating product, like that. It simply means that they will be investing money to a risky securities or a more balanced securities, like that. Okay. Marine insurance is basically perils of the sea during the sea voyage. Sea की जो जर्नी होती है उस टाइम पीरियड में अगर आपका कुछ रिस्क लाइक कुछ नुकसान होता है तो वो मरीन इंश्योरेंस कवर करती है. ओके. मरीन इंश्योरेंस शुड अकर एट द टाइम ऑफ लॉस. कराई किसने है पता नहीं है, ठीक है, वो इंपोर्टर एक्सपोर्टर दोनों डिसाइड करेंगे. बट जिसका लॉस है, सपोज करो एक्सपोर्टर ने शिप छोड़ दिया, अब ये उसके ऊपर नहीं है, अब सारा जो रिस्क उसके बाद एज्यूम होगा ना वो इंपोर्टर एज्यूम करेगा. तो अगर कुछ लॉस उस वक्त हुआ, so the whole of that thing will be taken up by the importer. So the insurable interest occurs at the time of loss. जिस वक्त लॉस होगा उस टाइम पे इंश्योरेबल इंटरेस्ट होना जरूरी है. मरीन इंश्योरेंस के टाइप्स है वॉयज पॉलिसी, लाइक एक पॉलिसी एक वॉयज एक जर्नी के लिए आपने पॉलिसी निकाली है. टाइम पॉलिसी से आपने बोला कि अरे मेरे तो हर दिन कॉन्ट्रैक्ट होते रहते हैं, लेट मी टेक आउट अ पॉलिसी फॉर 5 years 10 years, सो दैट इज अ टाइम बाउंड पॉलिसी. मिक्स्ड पॉलिसी रहेगी कि आप वॉइस भी कर रहे हो, लाइक टाइम पॉलिसी एंड वॉइस पॉलिसी का मिक्सचर रहेगा. लाइक से ड्यूरिंग अ सर्टेन पीरियड ऑफ टाइम, से 5 years के अंदर say one journey or 2 journey, like that. Then you have valued unvalued policy. जब आप पॉलिसी लेते हो, फर्स्ट ऑफ ऑल यू मेजर कि मेरा एक्सपोर्ट या इंपोर्ट कितने रुपए का है. अगर तो यू आर एबल टू मेजर इट तो आपको वैल्यू के हिसाब से पैसे मिलेंगे. अदरवाइज दे विल बी कंप्यूटिंग द लॉस एंड देन गिविंग यू द मनी. सो इट कैन बी वैल्यूड और अनवैल्यूड. देन यू हैव फ्लोटिंग पॉलिसी. फ्लोटिंग पॉलिसी का मतलब है कि आपने सपोज करो 2 करोड़ की पॉलिसी निकाली है. ओके, इट इज नॉट टाइम बाउंड. तो व्हाट विल हैपन इज, सपोज there was a journey and you lost goods rupees worth 40 lakhs. So now what will happen, उस 2 करोड़ में से 40 लाख काट दो, 1 crore 60 lakh rupees is left for the policy now. Getting the point? 2 करोड़ की पॉलिसी ली है. Here the amount is there, not the time. Amount is there. 40 lakh is lost. Now you have coverage up to 1 crore 60 lakhs, like that. नेक्स्ट इज फायर इंश्योरेंस. फायर इंश्योरेंस के केस बेसिकली होता है ड्यू टू इग्निशन. इग्निशन मतलब कि गलती से कुछ चीज स्पार्क कर गई है, यू नो, एंड इट हैपेंड, इट कॉज द फायर, लाइक वायरिंग शॉर्ट सर्किट हो जाना, लाइक अपने आप गर्मी से आग लग जाना, लाइक दैट. आर्सन इज बेसिकली वेयर यू आर डेलिबरेटिंग क्रिएटिंग फायर्स. ओके, सो इग्निशन के केस में there should be the policy, fire policy.
And if the arsonist is someone else?
Sorry?
If the arsonist is someone else, किसी और ने आग लगाई हो तो?
So it should be covered in that terms and condition. Of course, arson is a kind of criminal act. It's a criminal act, and it should be mentioned कि arson by like it will be covered. But then it is again it will involve police as well because it's a criminal case. Okay, so lightning, explosion of domestic boilers, मतलब accidental whatever is there, and it leads and it is due to ignition. So all these things will be under fire insurance. And again, causa proxima, sorry, your mitigation of loss, you need to make all the arrangements so that the fire does not take place. Type of policies, again they are almost the similar, so you can read it out. Motor insurance, I'm pretty sure you know, first party, second party, third party insurances that we do, depending upon what kind of thing you want to get covered. Miscellaneous में engineering insurance, आपके जो industrial equipment होते हैं, manufacturing plants होते हैं. Aviation insurance, your parts of aircraft, damage to the aircraft, passengers, all that. Householder, आपके घर के अंदर जो आपका theft policies होती है वो. Fidelity guarantee is basically the loyalty of your employees. क्या होता है कि if you have good employees and there are chances that if someone offers them better money, so they can just go away. So fidelity guarantee insurance takes care of that. Burglary, theft, robbery. So this difference is also important, guys. Do this difference, life insurance or other forms में. we're done with it. So I'll just stop here. uh, हमारा एक और बचा है, but we'll do it tomorrow. Now please leave your attendances. I'm going to stop the recording. Let the recording be done. Please start dropping your attendances from 8:58. Dipanshu, please start putting down your attendances, and I am going to consider them from Dipanshu S. That is your 8:58 p.m. Please put your attendances. So, guys, a lot of concepts, of course, and I'm trying my best to cover all. The problem is time, and that's why it's always better if you know घर बैठ के अगर आप खुद थोड़ा अपने आप पढ़ो and then you come, it's a better thing. But I generally try to cover all the points because I know students how our student who how students are. So yeah. Tomorrow, only transportation and warehousing is left from this unit. Most probably, we'll be starting with finance, and yeah, finance we'll be doing. It's a very interesting. Now you are acquainted with what business is and what we are doing and what is happening. So finance समझने में इतनी मुश्किल नहीं होगी. But still, again, there are a lot of technical topics. You might think that you are hearing it for the first time. So please do attend. Finance का थोड़ा सा I think करना चाहिए आपको understand like, and yeah. So please, one of you can copy paste and mail it to me, starting from Dipanshu at 8:58 p.m. Yeah, please. Mm-hmm. All the documents that they have, all the paperwork they have, whatever they are loading, unloading, they have the receipts for that. So that is one area. Then that is one criteria through which they are able to ascertain that how much was lost. Also they have cameras on board. So Mhm. You won't be able to recover if that was not I mean on the documents. You won't be able to getting any coverage from that. That was your risk, your decision. That was not concerned with the agreement. So definitely no point. Of course, it will be a loss. You are the sole bearer of that loss. You won't get any compensation. Why would you be getting any compensation for something that is not on the documents? Mutual funds. Again, mutual fund works on pooling of risks. They have this fund, this pool where the investor will be investing money and they'll be investing it throughout the securities. That is how they earn high income security, high risk securities. Like I was saying, there's a trade-off between risk and return. So the more risk you take, more return you get. So mutual funds are they're not miracle funds, you know. So you have to base your portfolio as such that you get upon, like, again, it will depend whether you are a risk taker or risk averse or a risk neutral person. But mutual fund works on this pooling of risks and pooling of funds, and that fund will be invested somewhere, and whatever return they'll be getting, you will be getting. There is no fixed, like, again, it depends upon the terms and conditions in a mutual fund, that what is the fixed income security you'll be getting, or what is the fluctuating amount you'll be getting. That are your mutual funds. I don't know. I rather not. I'm into trade. No, I see. I want to learn trading. I have a few apps and I have a few friends who keep on telling me. But I did teach a little bit about trading, about derivatives and virtuals, future forward contracts and all that. So it's a good thing if you know to trade. It's a good thing. Start with few thousand rupees and see how it does for you. Okay, so attendance done, everyone. So till this Madhu, Sakare Madhu. So please, one of you can just copy from Dipanshu at 8:58 p.m. and till Madhu, and just please. Okay. Okay, Anurag. Thank you so much. Okay, guys, let us continue tomorrow, and I'll see you guys tomorrow. Thank you so much. Have a good night.